Box delivered a mixed Q2 FY27 today, beating on the top line, but missing on full-year EPS guidance. Revenue hit $321.1 million, up 9% and beating consensus, and adjusted EPS came in exactly in line at 40 cents, but the full-year EPS guidance was lowered to 1.54, missing the 1.58 consensus, even though full-year revenue was actually raised to $1.29 billion.
Right. And, Q3 was similarly mixed. They had a revenue beat of $329 million and an inline EPS of 39 cents. So the market basically just punished that lowered full-year EPS outlook, sending shares down 1.4% in the regular session and up to 3.7% in after-hours trading.
So you have a top-line beat that's just getting sold off. Today, we're doing a deep dive into our notes on Box to figure out why, because to understand this sell-off, you really have to look past the top line and into the underlying metrics.
You really do. Because if you just look at billings, it was a massive bright spot. Billings accelerated 17% year over year to $309.5 million.
Wow, 17%.
Yeah, it's huge. And remaining performance obligations, or RPO, hit $1.7 billion, which is up 15%. Plus, non-GAAP operating margins were really strong at 29.4%.
And they generated $60 million in free cash flow, right, up like 67%. I always compare billings growth to, filling the pipeline before the water reaches the faucet. It's future revenue locked in today.
Exactly.
So with a massive 17% billings acceleration, why on earth wasn't that enough to save the stock from sliding? The profits must be leaking somewhere.
Well, the billings growth isn't happening in a vacuum. It's directly tied to their strategic push up market. CEO Aaron Levy was really highlighting this rapid adoption of their Enterprise Advanced tier and Box AI.
Yeah, positioning Box as this model-neutral platform for enterprise unstructured data, and they expect the net retention rate to exit the year at 106%.
Which is solid. It shows existing customers are actually spending 6% more.
But let me push back a little here. Is this just, obligatory AI washing for an earnings call? Is the Enterprise Advanced tier actually unlocking real pricing power and seat expansions?
I'd argue yes, because that 17% billings jump suggests it's not just hype. Enterprise customers are actually signing larger, longer-term contracts to access these specific AI features.
Okay, so if the AI and enterprise upgrade narrative is actually working, why did the full-year EPS guidance get slashed? It has to be macro, right?
It is. It's severe FX headwinds, specifically the Japanese yen. You have to remember, about 35% of Box's revenue is international.
Right.
And 70% of that international slice is in yen. So when the yen depreciates, those foreign revenues literally buy fewer U.S. dollars. That dynamic alone shaved 4 cents off Q2 EPS.
Ouch. And it's going to drag down the full-year EPS by 9 cents, right? Plus, they reported a stockholders' deficit of $351.1 million. See, I always get skeptical when management blames currency markets. It's like the easiest excuse in the book. Are we sure this FX excuse isn't just masking deeper operational inefficiencies?
That's a fair question, but...
Because, you look at, and insiders sold nearly 78,000 shares, which is worth about $2.1 million over the last 90 days. You have to separate the currency noise from fundamental execution.
Sure, but the math on the yen is just brutal. You can run the most efficient operation in the world, but if the currency you're being paid in loses significant value against the dollar, your dollar-denominated bottom line will get crushed.
That makes sense. So for anyone tracking this, you really have to weigh this divergence between Box's strong operational momentum and its macro-constrained profitability.
Definitely. The pipeline is full, but the dollars coming out the faucet are just worth less right now.
Which leaves you with one final question to ponder. They just repurchased 2.6 million shares this quarter, and they still have $378 million left in buyback capacity.
That's a lot of dry powder.
Right. So with the bottom line under pressure, is management using aggressive buybacks to prop up the stock price while insiders quietly sell their shares? Definitely something to keep an eye on. If you want to keep tracking this story and others, make sure to follow the show for daily earnings coverage.